Aloha everyone, Joshua Hayes at BigWaveTrading.com, and after Friday I can finally say, oh, finally. And by finally I mean we have been discussing the negative divergences in the market for quite some time. We were talking about the negative seasonality of September and October for quite some time. And once again, if you don't know how bearish it is in September, I just want to remind everybody it's bearish. But the really bearish part since 1950 is September 17th through the 30th. So we're not even there yet. That has an average annualized return of negative 22%. And since 2013, when the current bull market started, we have an annualized negative 15% return. And it's the only month with more negative months than good months. Actually, I think it's break even. It might be 4 and 4. I haven't looked for a minute. I just have those stats. So just so you know, it's a bad period of time moving forward. And we finally got the rollover that we've been expecting for quite a while. If you watch the past video lessons, we've gone over this ad nauseum. This was expected. But what we want to look for now is, do we fight the trend and try to look for support, or do we go with it? Well, obviously, we want to go with it. But I'm still a bull and remain a bull. At least till the demographics turn in 2034. Now, before that's going to happen, the Fed's going to start hiking rates at some point. They're going to start tapering at some point. That's going to have me go more intermediate term bearish. So I'm short term bearish, but more intermediate and long term bullish. But once the tapering starts and once the rate hikes start, I'm going to have to reanalyze everything and see where we're at. But I do know that I want to be a buyer of dips. And the reason for that is, historically speaking, we've gone over this before, there is no reason to be bearish on the overall market until the S&P 500 weekly gets below its 50 simple moving average on a weekly basis, fails to hold that level and rolls over, as you can see here back in 2000 and right here in 2008. Sure, it can eclipse it. It did so here in 2020, but notice it immediately reclaimed it. It did not find resistance and then roll over. Until that happens, you're not going to find me too bearish. Now, that being said, at the same time, I'm not a blind bull. And what you're looking at here is one of the wildest looking wedges I have seen in quite some time. I mean, this is gnarly. I don't even want to really draw it from there. That's insane. That's like, a little bit outside the pattern. If we just look at this wedge pattern, we're getting close to wanting to break it, but we haven't quite broken it yet. But just to let you know, I see it, and it's concerning to me without a doubt. But where should I be looking for support? We're just going to reference the SPY. You can use any index you want. The IWM is a bit of a different animal. We're trapped between these highs and these lows, and we are really range bound. If we crack below this, guys, there's a gap to fill all the way down here at these November lows that was due to COVID news. There was a vaccine, I believe that was Johnson & Johnson back there. Man, if we crack this, I see this as a support level. This is those minor support levels. And then the next major one is in this zone-ish area. So we're just going to focus on the SPY now. Now, obviously, the first area that every single person I know in the world is looking for support is to be, once again, at the 50-day simple moving average. Will it work this time around? Probably not, if we're all looking for it. Now, could we find support here? We have a candle like this on Monday, or on like this on Monday, or on like this on Monday, or like this on Monday. Sure, we reverse immediately. But if the selling continues to pick up steam, I'm looking at the 50 simple moving average, this 100 simple moving average, and then we have room all the way down to the 200 simple moving average, which currently lines up with this support level to remain within an overall bullish uptrend, longer term picture. So there's no reason to get super bearish long term. Short term, absolutely. And with the negative seasonality of September into October, you better believe I'm not going long stocks here. Once again, this is another video lesson where I don't have any new long swing positions of quality stature. The last one I gave everyone publicly was PLTR, and it's still working for a 5% gain, but I've got a hard stop here on 50% of my remaining position. and I still have my final stop all the way down here. But if this level goes and then it re-rolls over, makes another level and bounces, you better believe my green trade is not going to turn red on me. But once again, I don't have any new long signals because I keep people safe during a poor market environment. And even with that being said, at the end of the video lesson, I'm going to show you why a membership to Big Wave Trading is worth the $300 for the initial package, which gives you the quality signals, and why $600 a year is well worth it for what we offer when we give out all the long signals, speculative in nature, and the day trading chat room, which I will remind everybody, I wake up 2:30 in the morning every morning on Maui, and I don't leave my desk usually, and because I love this, and I'm doing end of day work also, it's about 2:33 p.m. So I'm spending 12 hours a day locked into this. And just to let you know, yeah, Friday seemed ugly, didn't it? Guess what? I made 2 reversal trades. They both didn't work. Cut them for very, very, very small losses, posted in the chat room. But at the flip end of that, initially I was looking for SPY puts when this market broke down here. I was looking for SPY to get back to this level to go short, which was right around, actually I was looking at the previous day close, because if we do Fibonacci retracement from here to here, the 50 level lined up with that level, but the SPY broke above it, consolidated above VWAP. And while I didn't take the signal as it re-broke down, our moderator and amazing options trader, Brahma, took it. He didn't realize the full move, but do you know how much those options moved from entry to the end of the day? 500%. You think $600 a year or $60 a month is worth it? I sure do. But besides that, I'm going to show you via our swings how we have plenty that are still doing fine despite this market, which is another reason why I can't get too bearish right now, because despite Friday's session, I had very few full 100% end-of-day long signals, only one of quality for a total loss of 4%. The market's just not as bad as everybody says. So you know that the 50, 100, and 200 I'm looking at support. Where would other areas of support be for me? Well, for me, it's always old levels of resistance. Now, I would also look at a weekly chart. But for now, because of the way that this market's going, we're just going to focus on the daily. My first level of support that I see price-wise would be this former resistance that then we broke out above, came below it for a minute, then broke out back above it. So this level is in play. Where's my next level in play? Well, these lows here, if I can get it to snap, lines up with this low right here. This low, by the way, lines up with the 50 SMA. I love confluence. Speaking of confluence, you can do other things like taking out a VWAP, drawing it from the lows, and seeing where the VWAP low is. You can see as long as we stay above that, once again, everything's going to be fine. But you can anchor that to any of these areas. You can anchor it to the highs. You can anchor it to the beginning of the month, the beginning of the year, whatever. And the more confluence you have at each level, the more conviction you can have at a reversal sign. For instance, for SPY calls intraday, for SPY puts intraday. That's what we focus on. So once again with the SPY, this level is a level of support that I'll be looking for to find if we break below the 50 and this support level right here. My next level then, this breakout above this high kind of goes through this area right here, this high, and it lines up with this low. This would then be a next level of support. So these are all areas of support I'm looking at some point, hopefully in September to October, to come into play. If there's a reversal like these candles off of them, I'm letting everyone know right here, you can sell bullish put spreads below these levels. So right here, you would sell the 435 and behind it buy a put at 430 to protect yourself in case it does go down further. That's one way of playing it. You could also buy outright call positions, and you can try to profit off calls. The problem with doing that on the market that's crashing on the bottom is that normally there's higher implied volatility, so you're going to really need some alpha from the intrinsic value of the calls to offset any kind of implied volatility that may come in on the bounce. But just even right now, if you don't think the market's going to hit all-time highs again for a while, you could sell the 455 calls and buy the 460s behind it. and you could do that every week out until the market finds a floor. These are all ways to play the SPY right now. I have some hedges on. I have some hedges on in the Dow Jones Industrial Average. I have some hedges on in the small cap universe, and I have some hedges on in the VIX. Not a whole lot, but they are hedges. They would be outright short positions if I didn't have long positions still working. So I've shown you levels of interest on the SPY. You can do this on the QQQ, the DIA, the IWM. It applies everywhere. But for now, safety's first. We are not even in the seasonally worst period of September yet, and we're already getting that rollover. And I warned everybody, when we do rollover, don't be surprised if one day of losses wipes out days to weeks of gains. Another V-shaped move on lower volume has led to another heavier volume sell-off. Rinse and repeat, everyone. Let's take a look at some of those long positions and how they're doing that I was talking about earlier. You want to see a mini heartbreaker that we were all talking about Thursday evening and Friday morning in the chat room? ISEE. This was the trade right here. I'll tell you, everybody, what I was looking at. Hammer candle over candle, heavier volume than the day before, max green bop. We got in the next day, started to not work out right, but then it did. Took some profits on the way up, but still, we were holding on. I got completely shaken out on Thursday. Thursday completely shook me out of the ISEE position. The next day, look at that. Am I upset? Nope. Am I mad? Nope. That's trading, folks. That's the way it is. It's just information. It's just data. And I've warned everybody about my end-of-day analysis, about my end-of-day trading. We're getting stopped out, shaken out more than we ever have in the past. This all started around 2018 with these shakeouts. It's okay because you can always get back in usually. We just couldn't on this one. So that's a heartbreaker. You want to see another heartbreaker that I discussed last week? How about AMR? Now, you still see white triangles because on an end-of-day basis, they have not failed yet. They did not close below my final stop. So that's why I am still tracking it for members on an end-of-day basis on the website. AMR is another one. New long position here. Candle over candle. Heavier above average volume. Pocket pivot point signal. Increase in green bop. Guess what happened to me on this day? You guessed it. Shaken out. Are my stops too tight? Maybe. But I don't like losing money. Could I have gotten back in the very next day? Absolutely. This is something I have to work on. I've already said on my best signals, when this happens, it happened the day before, by the way, on AMR with III. I got shaken out of half of it. This is what a great signal looks like on my end. Great now. This used to not be great. This used to be really good. This is a great signal now. I was shaken out, and I've told everybody, good to great signals, if they shake me out and on that same day print a bullish hammer candle, I'm supposed to buy it back. I had a brain fart that day on III. Now on AMR, on the other hand, this wasn't a buyable back one for me, but this is how you can employ that method. Next day is a hammer candle. You buy it back. Your now final cut loss goes right below that low. Hasn't looked back since. How much is it up without me? Let's suffer the pain together, folks. Less than 2 months, 117% gain. Is that worth $30 a month for the quality side, $60 a month for the speculative side? By the way, like I said, I've been on FinTwit. Good luck having these trades hand-fed to you like I do. I give you the stop levels, the buy stop levels, and the sell stop levels before I ever take the trades. So just keep that in mind. But let's go through some more that are just winners really quick. SEMR, I think I went over this one last week. Still working out. 51% gain. Friday was a red day. SEMR sure doesn't know about it. How about a long-term winner that I barely have any position in, INVE? Now remember, you can just keep marching your stops up. Stop here, my final stop right here on INVE of what I have remaining. Do I have a whole lot left? Absolutely not. I sure do not. The signal date was here. The entry was back there. You can still see it's always an iteration of a candle over candle, heavier above average volume, and or both with a pocket pivot point signal, green bop or increasing bop, INVE. How about that, guys? A little over a year, 280% gain. Yeah, it's not that bad. VTSI. VTSI, this one's been another good one. Once again, let's review the signal just so everybody knows what I'm looking at. Hammer candle over candle. Oh, excuse me. It was actually this signal right here. Hammer candle off the uptrending 50-day simple moving average on heavier volume the day before, max green bot. Took a while to trigger. Notice there's no white arrow right after the price because the trigger is 538. I get involved with this stock. Oh my goodness. Excuse me. This was the initial long signal of VTSI. My bad. It gapped up on me the next day. This was the initial long signal. This was the ad. I got involved when it went below the price. I got an alert, called the trade back on, got filled on VTSI, and got 2 positions in it, and it worked. I totally forgot about that. And that happens sometimes, guys. And this is why we don't do market orders. Good to cancel buy stop was 480. The limit, 485. When it gaps up to 76, there's nothing to do. There's no trade to take. So I just want to show you that. I totally forgot about that. Amazing. By the way, everything is timestamped on the website. So you can look up VTSI in the search box, show you the exact date that this was a new long signal. MTTR, we've gone over this one before, still working higher. Friday, what sell-off? 37% gain since the signal. MATX, Friday, what sell-off? 32% since the long signal. What sell-off? COOP, longer-term position. Once again, don't have much of this one left at all. It's an embarrassing low amount of shares. So 53% gain since signal. Where's my final stop on it? Right here. Here's the half. 50% here, 100% right there on what remains of COOP in my portfolio. And then a recent one, EVER, right there. Go long this day. 10% gain in a short amount of time. And do you guys want to see another heartbreaker? OG. If you guys don't know what you're looking at here, you've got a hammer candle, double bottom support, heavier volume the day before, and a pocket pivot point signal. I know there's no green bop, but for an IPO, look at all the open bodies, look at all the hammer candles. This would normally always be a new long position, but once again, it wasn't good enough for me. 314 would have been my stop, limit probably at 315 only. Another heartbreaker, guys, and that's just it. That's trading, guys. You're going to have winners. You're going to have losers. Here were all my 100% end-of-day sell signals on Friday. CALB, negative 2% loss. PJP, 0%. FRPH, negative 2% loss. The only quality one, LA&D, negative 4% loss. That's what I'm working with over here, everyone. All right. I hope you'll become a member of the family. Like I said, gold package, platinum package. We even have a stock Twitch room where I just post the quality signals. There is no other information given. The video lesson is for gold members. I'll post a video lesson there whenever we don't have any new long signals. But the bottom line is things are still working out there, and we're still finding them, and we're still hitting winners. But at the same time, if you're not careful here moving forward, it's going to be a rough ride. The market's weak. Am I going all in on my new long positions? No. Am I going 50% of my account capital per new long position? No. Am I going 20% of my account capital in new long positions? If they look like EVC and III, absolutely. But for right now, all I'm doing is I'm taking my buy stop that I give everyone before I enter the trade, minus the sell stop that I give everyone before I enter the trade. I get that number. I divided it into 1R. Some signals lately have been 2R. Here's one. And it hasn't worked out. RGA doubled it up because of the volume and bop spike. Didn't like the chart pattern. Hate that candle before it on the above average volume. But overall, it's an insurance stock. I can handle a 2R trade on the insurance stock. What's it doing? A whole lot of nothing. How bad is it hurting us? Not even a 1% loss. Okay. So right now it's just 1R, 2R trade. But I take the buy stop, or the sell stop minus the buy stop, get that total, divide it into either 1%, 2%, 3%, 5%, depending on what my R that I'm willing to risk on the trade, and that's my share total that I take the trade on at that good to cancel buy stop price. But anyway, long video lesson, but I just wanted to let everybody know, stay safe out there, but despite us saying stay safe out there, we're hitting 500% SPY puts intraday on Friday, and you can see the longs that are still working. If you're having trouble in your trading, please come join the family. We're waiting for you.